Welcome to the Morgans Edward Street weekly wrap as we wrap the recent reporting season. Whilst most attention has been very much focused on domestic events this week, it's been a week of records in the US. Both the S&P 500 and Nasdaq settled with their fourth consecutive record closing high midweek as investors eyed the latest round of strong economic data and amid optimism around easing global trade tensions. The broader S&P 500 rose to settle above 2,900 for the first time. Amazon.com rose to a record high, buoyed by an upgrade from Morgan Stanley, and Apple Inc. also hit a record high. Back here, of course, the reporting season has come to a conclusion. Three main themes to note. Firstly, business conditions are resilient and generally supportive. The tone of management commentary has been broadly positive and points to a continuation of good growth in the year ahead. As an example, CBA stated that long-term we remain very optimistic about the economic prospects of Australia. We see against that backdrop falling unemployment, growth above trend and low inflation. So in the context of a slowing housing market, which is unambiguously a good thing long-term, it's actually a good economic backdrop for that to be occurring. Secondly, costs are creeping up and getting harder to ignore. Brambles, Amcor, Cube, Rio and Whitehaven all pointed to inflation across the board. And thirdly, value names are attracting attention for largely in line to slightly better than expected results. Telstra, Suncorp, QBE, Vocus and Supercheap Auto. Similarly, the shorters have been disappointed by fair results. As an example, Domino's, JB Hi-Fi, Afterpay and A2 Milk. Clearly the market was fearing worse results coming into August. Meanwhile, the growth momentum trade continues despite some slightly softer outlooks from expensive growth names such as Cochlear, Seek and realestate.com. Please note that the comments in this video are general in nature and please speak to your Edward Street advisor if you wish to know if any of the stock recommendations suit your personal needs and objectives. Now for the buy idea of the week. The stock I'm going to talk about today is Reliance Worldwide Corp. Ticker code is RWC. Reliance is a manufacturer of plumbing supplies founded by the Muntz family in Melbourne 30 years ago. RWC has grown up to be a market leader in behind-the-wall plumbing fittings in Australia, USA and more importantly, or recently Europe, via the acquisition of John Guest in the UK. The company have delivered compounded growth sales of 13% over the last 11 years, which includes the GFC, and biggest housing crash in US history. Reliance reported Monday, and whilst its numbers looked attractive, it did fail to exceed investors' high expectations, which resulted in the stock falling 15% over the past week. It's fair to say that the stock was overpriced and has now come back to earth. I'd be keeping this one on the watch list and I'm looking to accumulate should the stock find any further weaknesses. Whilst it's still not cheap, trading on 25 times 2019 earnings, it's got the growth to justify a premium multiple with a forecasted growth rate of 30% over the next 3 years. Our analyst has a $6.25 target price, which leaves plenty of upside from any further weakness from the current share price of $5.32. As you can imagine, there's a whole host of stocks going ex-dividend next week. Please contact your advisor if you'd like to know specifics. Well, that's it for another wrap. Please feel free to share this video with your colleagues and friends. And of course, make sure you like the Morgans Edward Street Stockbroking Facebook page and also subscribe to the YouTube channel below. Have a great weekend.